Hello, from so welcome to Invest. We're talking about investing, finance, and professional development for today's items only. The investment going to talk today will be Ethereum ETH. It's my second posting of today. Respect to recording time of 3:21 p.m. on Eastern Time. Ethereum currently trading $4,720, down about 0.27% so far. On the overall crypto market and the equity market, we had a slight surge right earlier today from the rebound that we've had ever since the CPI report that came out earlier this morning at 8:30 a.m. Obviously, it's not the best report, right, per our depictions earlier this morning. But because of the fact that we had that anticipated pressure that we've had yesterday, with the majority of investors, based on the investment sentiment that we've seen yesterday, it was leaning more towards a better sentiment, right? And as we had that confirmatory signal from the CPI report, despite still being negative, on a pre-market perspective, we were selling off a little bit, which subsequently translate into an anti-correlation effect onto the crypto market, which incentivized, Bitcoin and Ethereum to surge all-time high earlier this morning. But as we, derate during the day, right, this seems like the yields has subsequently spiked all over again, right? The Feds are still trying to triangulate their quantitative tapering plan, triangulating and maneuvering between the job numbers, with the still more of a up in the air type of factor on the COVID variants, right? Despite the travel ban being subsided and despite the economy seems like it's slowly opening back up all over again, and the sector rotations among hedge fund communities, is driving some sort of a mixed signal, right? But with that affectation on just normalizing on a macro perspective, from the slight dip all the way to the surge, right, which we saw that prominently among all the equity side of the house, that as 1 o'clock start to hit, right, is start to slide back down a little bit. And we've been seeing this escalator motion downward, up until now, right? And I think right now we're slowly reviving back a little bit on the equity side. But because of the fact that we've been having some volatility onto the equity market and the yield seems to be spiking a little bit, despite currently at the moment right now, as we speaking, is normalizing, which is the reason why we've seen some rebound or more of a sustainable level of consolidation among both crypto and equity right now. Ethereum's currently trading at the $4,716, still hovering on a sideways fashion right now, right? And with respect to the news front, I would say there's some news, but I think there are a lot of quantity, in terms of the news on how many news has came out. But in terms of quality, I don't think the news are really that substantive, right? They're just basically saying or just reminding us how much Bitcoin and Ethereum has been surging so far, and some of the activities that we've been seeing so far among the altcoin community, like Dogecoin, Shiba Inu seems like it's still selling off down about 8% right now, which we'll dive into technicals in a bit, right? But in terms of the catalyst of driving the crypto market specifically, I would say there isn't anything that is really worth mentioning. So let's just dive right into this technicals now. So with respect to Ethereum, it's currently just hovering on a sideways fashion, right, with the normalization that we've seen from the reversal that we're seeing among the equity market because of the CPI report affectation that came out in both the pre-market and as the market opened this morning, right? It seems like reversing back up. So with that correlations, it subsequently drives some sell-off, not like a minimal sell-off, kind of just a normalization to hover back down to more of a normal level, knowing the fact that we've been running relatively hot, right? So right now we're still at the 67 out of 70. We're still curving up, so still bullish. There isn't any signals in terms of reversing yet, right? But the risk is still all-time high at the moment because it's overbought. At the same time, we've been stretching up for quite some time now, despite the golden cross that was technically formed early October, and it's almost mid-November already. So we've been surging for basically 1.5 months so far, right? So, and we have not really been cooling off, or nor have any significant cool off or correction yet, right? So we will. I think it's just better safe than sorry than just to hold and watch how the market goes going forward, right? And when and if we cool back down, and I not say if, when will actually will happen. When we cool back down, right, we can then dollar cost average, accordingly with the respective level of consolidation zone that we've identified down below here, right? So with respect to Bitcoin right now, it's down about 0.20%, comparable to the same affectation across the whole crypto market. Right now is forming a golden cross, but the golden cross is like kind of, how would you say, normalizing right now, because we ran up really hot in the last couple of days so far because of the news that we've heard from Elon Musk, the Australian Bitcoin ETF news, and also with respect to inflationary pressure news from the CPI report that we heard earlier today, right? It's all drove up some buying pressure across the market. And the fourth one is the technical coming true, right? Just the golden cross that we've formed. And with all of that affectation resulted in the level that we've tested today at $69,000, which is all-time high for Bitcoin in a historical perspective, right? So right now we're still overbought at the 65 out of 70. So ideally just, wait and sit on the sideline, just like watch your money grow. It's not the best idea to incur more risk at the moment right now. You typically want to buy at a discount, not when we are screaming overbought on all levels, right? So definitely watch out, and just watch on the sideline for now. And but if you want to buy now, just have that mental preparation that you might see some sell-off coming, because we've been running up really hot for basically, again, right, a month and a half now. So whatever goes up really fast comes down just as fast, right? And with crypto, it's something that, as you know, we have seen the volatility in the past, right? So I just want you to be, protect yourself and do not incur, risk that you don't necessarily want to, just because you feel like you are missing out. You know what I'm trying to say? Because that's not a logical feeling at all, right? And Dogecoin right now is cooling down about 4.12%. The reason is because it's just a smaller entry level in comparisons to like Ethereum and Bitcoin, so it's demanding a larger price sensitivity in terms of like the volatility that translates into it, right? So at the moment right now we are still curving down, so we're just normalizing, selling back down to more of an ideal level of 25 all the way to 20 cents, which are the next technical levels for us to dollar cost average at. With the 50 out of 70, so it's not like terrible if you want to incur risk right now, but it's not the best either, right? So I think ideally just wait for it to cool back down a little bit more would be more logical. But if you want to incur risk now, it's up to your risk aversion, right? Because if you believe Dogecoin in terms of a long-term value proposition, it makes sense to just hold it for a long term, right? Cardano is cooling off because of the golden cross search that we've had, and it couldn't break above 240, so we basically got canceled out and subsequently normalized back down to test, and we broke 220 because of lack of consolidation that we've had, which is weird because like 220 should technically be a good consolidation level based on how it looks historically, but it cracked that completely, but it kind of normalized back up, but we are still below the 220, so not a good sign. So I think ideally selling back down to, again, right, the 194 if we break the $2, and I think trading around like the 187 to 190 is probably the best level to dollar cost average from here. Solana right now it's selling back down, so we're forming a def cross slowly. We can see that clearly right now, right? We're at the 62 out of 70, so ideally selling back down to 130 all the way to 113 would be much more logical from here. XRP right now is still leaping up. There's no bearish momentum yet, so ideally selling back down. Not selling back down. So I think we're contemplating, do we break above 130 or break below 120, right? And I think we're struggling, and I think we got canceled out so many times on the 130 level that it's probably not the best setup because we still overbought the 66 out of 70. So I think ideally wait for us to come back to 120 to 110, like around that level would be much more logical. I think 110 is not a bad level because of the consolidation we've had so far. Polkadot right now is selling down. We have a form of death cross. So we are going to breach the gap by selling back down to the 42 as a first level consolidation. We break that, we're going to go down to 30 all the way to 25, which is like 30 and 25 are the frame of reference that you want to be dollar cost averaging for me personally, obviously. Algorand is surging right now, and we are breaking the 210, which we were trying to before, and this is, we broke the relatively strong resistance level actually, that would have canceled out 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is a relatively good sign that we are having some more investor appetite breaking above the 210 level, and now we're surging. And I think the next level technically we could go up to would be somewhere around like the 230, which is the level that we will get to as a next level because of the flat number. So we are still at the 65, but we are still having that leap up right now. So in the trajectory perspective, I think we should technically still see more buying pressure ahead. But right now, is this the best ideal level to dollar cost average? I think no, because like ultimately the more consolidated level is still 182 or somewhere around like 160 to 150 from here. Shiba Inu right now is still selling off, so no signs of reversal yet. So this is just keep selling off. This is bleeding as we are expecting, right? So ideally wait for it to come back down to 285, like around like the 2800 level to the $900 level will be the next levels that we should dollar cost average at. In terms of risk management level, these are the levels that I've identified for as we deplete the RSI back to below 35 or around like the 30-ish, and as we deplete back to the preliminary golden cross, right? Again, I'm not saying these are like the future predictions, but I'm just saying that as we oscillate and complete the market cycle, it's logical for us to get back to these levels ideally. And as we deplete based on the current setup right now, the levels that we should technically get to will be the level like this, as we are leaning more towards the oversold, right? So hopefully this is helpful. Really, appreciate you for dropping by again on this Wednesday afternoon. It's definitely a volatile day, right? And it's hard to triangulate multiple different factors at the same time. So hopefully my analysis makes sense into simplifying for you guys, so it's more easily digestible for you, right? So really appreciate you, and stay tuned for some help. Take care.